Hey everyone, my name is Tom Karadza, and today we're going to tackle the question of how do you use real estate to acquire more Bitcoin. We are getting this question a lot right now. Some people are starting to figure out that Bitcoin is something they want to add to their lives and their portfolios. They have some real estate and they're trying to figure out how to marry the two. They're not sure if they want to give up their real estate just yet. How much Bitcoin do they acquire? And we've been helping people look at this using different spreadsheets that we finally turned into a calculator that I think that you may find interesting. We're going to use that calculator today to answer this question. And I think that the majority of people, Canadians, Americans, everyone around the world, they fully don't appreciate how much there is a leaky bucket in their earnings, in their investments, and just the nature of the system that we work in. The currency, whether you're in Canada, the US, and Europe, wherever you are, the currency in the country that you're working in is getting debased at some rate. And in Canada, it's getting debased at about the rate of 8.5% a year over the long term. Last 12 months, it's about 7%. Over 1967, from the data that we can gather, it's about 8.5% compounded annually, which means if your investments aren't gaining at least that much a year, every single year, you are losing to the debasement of the value of your dollar and the debasement of the currency that you're investing and working in. So you have to beat this. And if we skip forward to this next slide, we use ChatGPT just to pull some data. And this is, we used to pull this stuff manually and we're getting the same results. So I feel like I can trust ChatGPT right now when it's pulling this data. But the compound annual growth rate of Toronto area real estate prices from 1967 to present day is also about 7% or so. You can kind of see it right here. I know the text is a little small, but you can see the conclusion of the ChatGPT deep think that I had it do. So real estate really isn't changing. The price of real estate is just reflecting the loss of value in the currency. Most people don't understand that, but that's essentially what's happening. It's why real estate goes up and up and up. It's not like the bricks or the shingles or the windows are getting better. And in fact, they're getting worse every year. They're getting older, but the value of the dollars used to buy the real estate is declining so much that it's driving up the dollar price of the real estate. And then if you mix in some structural imbalances like a lack of housing and population bumps that go up really quickly, that can enhance the situation, make it even worse. But ultimately, it's a devaluation in the purchasing power of the dollar that is making real estate go up. And then if we turn to Bitcoin for a second, before we turn into this, look at this calculator that we put together, most people will look at the dollar price of Bitcoin and it fluctuates quite wildly. You'll see it, go up really high and then it'll be in the media, it'll hit CNBC, it'll hit all the financial press, and then it drops back down and everybody kind of goes crazy. And people kind of pay attention for a little while it's running up and then maybe while it's dropping back down and they kind of forget about it. But what most people don't know is that if you look back over time, the compound annual growth rate of this asset is remarkable. So if you go back, 10 or 11 years ago and you see from today, so June 2025, and you go back 10 or 11 years and look at the compound annual growth rate. So from 11 years ago, the compound annual growth rate of Bitcoin from 11 years ago is 58% compounded annually. If you go back 7 years ago, it's 45%. If you go back 5 years ago, it's 61%. The lowest that we can find in this time frame is 4 years ago at 28% compounded annually. So this is what gets really interesting, is that the masses and the majority kind of dismiss this thing. They don't understand the technology, which we're not getting into today, but is fascinating. So they don't understand the technology. They just look at the dollar price and the volatility, and they're missing the big story. And the big story is that you have an asset class here that has a compound annual growth rate that is blowing absolutely everything out of the water. And part of the reason for that is that we have an old kind of dollar system that is slowly dying. Governments are trying to prop it up. Central banks are trying to prop it up. And you have a new digital ecosystem that is growing. And because it's just in its infancy still, it's growing at these compound annual growth rates. So that's kind of what we're using when we look at some of the calculations that we're about to do next.
Hey everyone, I've got a quick shout out about the Your Life, Your Terms report. This is Tom's weekly newsletter where he and Nick share real stories, experiences, and powerful insights to help you live life on your terms. Each week, Tom breaks down the economy, real estate, macro trends, and Bitcoin, and gives you actionable steps to make these insights work for you. No fluff, no vague predictions, just a clear path to thriving no matter what's going on in the world. Tens of thousands of Canadians are already getting the real information they need to level up their lives every week. I can honestly say it's the only newsletter that I've stayed subscribed to for years. It delivers real value that keeps me coming back for more. Join us and start getting the insights and tools to create the life you want, plus entertaining and inspiring stories from Tom and Nick along the way. Sign up for free at rockstarinnercircle.com/get started and start living life on your terms. That's rockstarinnercircle.com/get started. Your first step to living life on your terms.
So here's a calculator we put together. The URL to get access to this is rockstarinnercircle.com/BREAS. And BREAS stands for something we're just calling the Bitcoin Real Estate Asset Strategy. And here's how we are talking to some real estate clients that have held some real estate for some time and how they might consider looking at Bitcoin. So we're trying to give them a perspective or a context to look at this thing a little differently. So in this example, again, I just want to emphasize, this is typically for people who have a rental property and they've been fortunate enough to have that rental property for a few years. So they have some equity that they can tap in that rental property. And then in this example, I'm using a property of $750,000. So here's a $750,000 rental property. And we used a property appreciation rate of 7%, which is pretty much the historic norm over medium and long term. In the short term, it can be anything, of course, but over the, from 1967 to this date is a long chunk of data. And we can see the average is at about 7% a year. And if we carry this forward 20 years, so in our example, we're using 20 years to show some of this math, you can see at a compound annual growth rate of 7%, the $750,000 property after 20 years would turn into $2.7 million. So it's kind of right here on this calculator. So then we said, okay, if you're fortunate enough to have this property and you have some equity in the property that you're perhaps not tapping and you want to explore adding this hard sound money to your portfolio Bitcoin, but you're not sure if you want to invest in it and you're not sure the best way to do it, but you're willing to kind of take one step into this world, you might want to consider tapping some of the equity. So if you have a rental property, and let's say, I'm going to use an example of it's cash flowing a certain amount, let's say anywhere between $500 and $1,000. And if you were thinking of getting into investment properties in 2025, a property that would do that right out of the gates when you buy it would be something like a student rental property. A 5-bedroom student rental around Western University in London, Ontario will cash flow between $800 and $1,000. So let's say you had this property, it's cash flowing that much, you've had it for a little bit of time, so there's some equity in it that you can tap. And you get a credit line from the bank on that property. So you access $100,000 of the equity in that property. The interest rate from the bank is going to be, different depending on when you do this. But let's say, 5.5% right now. I think I'm being fairly conservative in 2025, and that's the going rate on a HELOC to access some equity in a rental property. So the carrying costs on that is about $458 a month. So that's kind of represented right here on the calculator. So now we can do a couple things. Let's say we take the $100,000 and we go ahead and use it to buy Bitcoin. If we put Bitcoin in here, before I put the $100,000 in here, I want to just explain, it's going to calculate the compound annual growth rate of Bitcoin over 10 years at the rate that I've entered right here in the calculator, and at 20 years at the rate I've entered right here. And the reason I chose 29% as the default, or that we chose 29% as the default, is that's about the lowest that we can find right now when you go back on the previous chart I shared, right? So you're always going to find different compound annual growth rates. Some hardcore Bitcoiners are going to think we're being way too low. Other people are going to say we're being super generous because they can find one time frame where the compound annual growth rate over a few years was lower than this. But I've never seen an asset class have this type of compound annual growth rate for periods of 3, 5, 10 years. So at 29%, we feel really comfortable using this, but you can change this in the calculator to whatever you see fit. This happens to be in line with Michael Saylor's, who is the chairman of strategy, what he is using in his analysis for Bitcoin over the next 20 years as well. So 29% seems to fit on multiple levels right here. And that's the examples, that's the rate that we're using, but you can go ahead and change that. So now let's say I have access to the $100,000 and I put it into Bitcoin. And for the next 10 years, it compounds at 29%. And for years 11 to 20, it compounds at 29%. Let's see what happens to our asset here. So if I put in $100,000, so now we can see at this growth rate, the property value stayed at 2.7 because it was appreciating 7% over a longer period of time. And now we took the $100,000. It's costing us $458 a month, but we had a cash flow positive property. So the property itself is paying for the $100,000 in fiat or Canadian dollars that we're accessing from that property. We're then taking the $100,000 and we're putting into Bitcoin. And the Bitcoin is going to, in this example, appreciate 29% compounded for 10 years. And again, you can change this to whatever you see fit, and 29% for the 10 years following that. And you can see that the Bitcoin value after 20 years turns into $12.6 million. It surpasses the value of the property. And it looks like it surpasses the value of the property around year 12 in this example. So at year 12, the Bitcoin that you purchased for 100,000, if our assumptions are correct, and there's no guarantees, do your own due diligence, of course, decide for yourself. Do not listen to us on this. But if, history proves accurate and it carries forward, this is really interesting. Instead of having a property now after 20 years worth $2.7 million, you have a property of 2.7 and Bitcoin value of 12.6 for a combined BREAS value, or Bitcoin real estate asset strategy value, of $15.3 million. Now let's talk about what is the risk that we did here to get this, because when we first started looking at this, our minds started exploding on looking at this math when we're punching it into some spreadsheets. The risk is that we take the $100,000, of course, and the property, the $100,000, and Bitcoin doesn't appreciate at this rate, it appreciates less. It could, of course, lose value. So if it loses value, let's choose 50%, it loses value over the next 20 years. You now have a credit line that you took out for $100,000, but now after 20 years, the value of that asset that you purchased with that credit line is only worth $50,000. Luckily, the property in that world, because of monetary debasement, likely went up, so we can cover that $50,000 with some peace of mind, and we weren't paying for the credit line out of pocket because the rent was covering it for us. And the rent becomes another risk factor, of course. How comfortable are you in the rent that you're going to get on that property over 20 years? Nick and I have owned student rentals, and I'm bringing up student rentals, but this can be done obviously with any piece of income real estate. But student rentals we've owned for just over 25 years now, and for us, they've been the most stable type of real estate. So we feel very comfortable that the rent is very stable on those particular properties. It seems like an insatiable demand around universities. But of course, you have to analyze that and consider that as a risk. So those are some of the factors to think about. And I guess the hardcore Bitcoiner might say, well, are you sure your property is going to appreciate at 7%? So you got to think about that as well. So there's definitely lots of things to consider here. But if this gives somebody the comfort to step into an asset class that we believe you should at least be considering adding to your life and adding to your portfolio, perhaps this is the easiest way to do it. And then if you do that, and we just played around with some other stuff, if I could zero out, let me refresh this page to zero out the $100,000. You don't even have to put $100,000 in. Let's say you take the cash flow from the property. Let's say the property was cash flowing $1,000, and you take the cash flow from the property. Don't make an initial investment, and take the cash flow from the property at $1,000 a month and see what happens. Just doing that changes the value of this one rental property from 2.7 million after 20 years using these assumptions to 9.4 million. So this is where things just get absolutely interesting. And as the monetary debasement continues, you really don't need much of a combination of hard assets between real estate and Bitcoin together to really change your life. So here is the $100,000 I put in upfront every month. And let's take the excess $500 that we had left over in cash flow. So half our cash flow, let's say if we were lucky enough to have a property cash flowing $1,000 a month, half the cash flow is used to cover the credit line. The other half we're putting in Bitcoin. Look at the math here. You get a $2.7 million property. The Bitcoin value is 15.9 million, and the BREAS value is 18.6 million. So, I mean, this is where things kind of just get interesting here. So really that's what we wanted to do with this, is show you that there is a way that if you're hesitant to look at this asset class, but you want to explore it, there might be ways to do it if you're fortunate enough to have a rental property that's cash flowing, you have some excess cash where it's not really affecting your life very much. You're dipping your toe into the Bitcoin world. And I know for some people, you're going to say dipping your toe at $100,000. That is a pretty good first stab at Bitcoin. I got to admit, at the $100,000 mark. But you can play around with this. Like I said, you could do 10,000, 5,000, 2,000. It was just an interesting example. This one particular client that we were speaking with was considering something like this, and the math was starting to blow us away. So that's what we wanted to do in this example and show you something we're calling the Bitcoin real estate asset strategy. Hopefully that helps you think this through a little bit, or gives you at least something new to think about. We're kind of fascinated by this asset class. We believe after all of our research, it's definitely something that we should all be considering, especially as one fiat system clearly is on its, it's starting to fail at a more rapid pace. It's going to be around for quite a bit longer, we believe, but it is failing in real time. Governments are stepping in, the central banks are stepping in to kind of keep it on life support. And there's this brand new digital ecosystem that is growing that we believe Bitcoin's going to be at its base layer as a monetary unit, and it's exploding. And when you look at some of the compound annual growth rates of Bitcoin now, we're not talking about 2 years or 3 years. Bitcoin has been around since 2009. We have a meaningful amount of data, we believe, to make some of these assumptions going forward. So again, do your due diligence, figure this out for yourself. Don't trust anything we say, verify all of this for yourself and look into it. If you want to check out the calculator, you can visit rockstarinnercircle.com/breeze.